All right, everybody, it being 2 after the hour, we're going to go ahead and get started. I'd like to welcome everybody to today's webinar, Washington, D.C. in the Time of Coronavirus. Our speaker today will be Jim Tobin. Jim is the Executive Vice President for Government Affairs and Chief Lobbyist at the National Association of Home Builders. Today we will hear the latest on the federal government's policies, efforts to ease the strain on the economy and prepare for a return to normalcy. Before we get to that point, we do want to welcome our presenting sponsor, today's webinar, and also the presenter of the webinar series, Duke Energy. Today we have with us Cara Brooks, Community Relations Manager, for a brief presentation by Duke Energy. So Cara, without further ado, please go right ahead.
Thank you. And Brian, can you hear me okay?
We can hear you just fine, Cara. Thank you.
Okay, great. Thanks. So good afternoon, everyone, and thank you for allowing us to be part of today's topic on Washington in the time of the coronavirus. As our states gradually begin to ease restrictions and return to a new normal, we remain committed to supporting our business customers and those in need. We know how many of our customers and communities continue to feel the financial challenges brought on by the COVID-19 pandemic, and we're focused on doing what we can to help. In order to help, we've continued to waive fees for late payments and have suspended disconnection for unpaid bills. We also remain committed to supporting our communities and have awarded over $130,000 locally in grants to assist during the pandemic. With these grants, we focus on organizations which help the elderly and homeless, but as well help the healthcare workers, first responders, and schools. As an essential business, our crews have continued their work and their focus on safety. They are wearing enhanced personal protective equipment in many cases and practicing social distancing, as recommended by the CDC. Please remember to avoid approaching our crews and their work sites for their safety and yours. We know how much our customers depend on us to provide the reliable energy and they need every day, but especially during these uncertain times. We will continue to deliver on our commitment to our customers and support our communities throughout this crisis. On an exciting note, and specific to many of our audience today, we're happy to debut new enhancements for the Duke Energy Builders portal and app. If you've not seen this portal yet, it's designed to help improve the quality of our service, making project management for builders and developers easier and more consistent. Now you have the tools to get your power turned on and your projects underway right at your fingertips. The Builders Portal and Builder app is the first step in bringing information and interaction with Duke Energy literally in the palm of builders and developers' hands. These capabilities will continue to grow and change over time as we incorporate users' feedback and build out additional functions to serve you. As you can view in the slide, features such as work order status, direct contact information, online service requests, and uploading large files are just a few capabilities of this website and application. To register, please go to builders.duke-energy.com. Complete your registration by responding to the link in the email you receive in response. No need to register twice. Log into the Builder portal and the Builder app with the same information and you are ready to go. In addition to the Builders portal, Duke Energy values products like lighting and has been the premier outdoor lighting provider in our region for over 70 years. Our product selection offers premium quality products that meet utility industry standards and rigorous technical and safety specs for fixtures and poles. We offer financial flexibility through payment options and ask for little to no upfront capital. You are only responsible for one low monthly cost. Also, we cover maintenance. With Duke Energy leased lighting, all maintenance and repairs are included. If interested or for more information, please contact Mitch Eberens at mitch.eberens@duke-energy.com. In closing, we at Duke Energy are here to support you and our growing community's current and future needs and look forward to transforming our customers' experience to create a smarter energy future. Thank you.
Thank you, Cara, and thank you again to Duke Energy for your ongoing support of our webinar series as we attempt to keep our members informed with what they need to know during these times. Quick before I introduce Jim Tobin, a little bit of housekeeping. If throughout the presentation today you have a question and need to have that answered, our priority is for you to enter that question into the chat box. Very simple to do. Hit the little quotation signal next to it, and it will log your question in. We'll also have the opportunity to have some question and answer afterwards. So Without further ado, I'll go ahead and introduce Jim. Jim Tobin is Executive Vice President for Government Affairs and Chief Lobbyist at the National Association of Home Builders. Jim is responsible for directing the federal, state, and local lobbying as well as political activities for NAHB. In addition to his lobbying responsibilities, Jim guides the activities of the association's Political Action Committee, BUILD-PAC, and the Grassroots Network. Jim's past policy experience has concentrated on tax policy and environmental policy. He joined NAHB in 1998, and before becoming NAHB's chief lobbyist, Jim was NAHB's vice president for federal relations. Prior to NAHB, Jim was senior legislative assistant to former U.S. Representative Frank Riggs of California and former U.S. Representative Gary Franks from Connecticut. Jim holds a BA in political science from the University of Connecticut, and he resides in Falls Church, Virginia, with his wife and their 2 children. So without further ado, I'll turn this over to Jim Tobin. Jim?
Brian, thank you very much. I appreciate the invitation to join with you all today. I also want to thank Cara and Duke Energy for sponsoring the webinar as well. Thanks for the opportunity to host me all the way from Falls Church in my little home office here as we try to manage what seems to be a daily changing of the environments here. Obviously, no one saw the coronavirus pandemic 3 months ago, and yet in the last week we've seen social upheaval with the Black Lives Matter movement here in Washington, D.C. between with the protests that have been going on, I think pretty much for over a week now, and they vow to continue long into the summer, and as Congress tries to address some of those issues there as well. But for us, taking a quick look backwards at what the industry has gone through for the last 3+ months as we've tried to weather the COVID-19 storm, and what was Washington D.C.'s response. And at NAHB, we're just one of the 3 legs of the stool that is the NAHB Federation, and working closely with Brian and the state and local associations across the country, doing our part to make sure that Washington was helping our members and our customers to stay employed or provide assistance if they needed it, and more importantly, keep the industry moving along during the crisis. So one of the first things out of the box, I think probably the most important thing that NAHB was able to do early on in the crisis was, as states and localities were starting to shut down into in quarantines or stay-at-home orders, one of the most critical things that happened was getting the industry designated as a critical infrastructure industry, and making sure that not only did the federal government do that, but also we were able to translate that action into at the state level, and in some instances the local level. And we were very successful in doing that, and we're engaging with the White House and engaging with the Department of Homeland Security to get on that what became the second list of critical infrastructure industries, and making sure that all the attendant parts of what it takes to get home building moving, whether it's management from the apartment side, whether it's inspectors and planning offices, making sure that the whole workings of the industry were designated as essential, and then translating that into governor's offices through our state and local team. A handful of states, of course, decided not to play along as well. New Jersey, New York, Michigan, Pennsylvania, Washington State, Illinois, some of the bigger states out there, they decided that construction wasn't essential. And so we worked over those intervening months between the good states that did the right thing, and then others to try to prove daily that construction could continue. It was important to continue during the crisis, especially since we have such a housing affordability issue across the country. And then the second piece was, and it goes hand in hand with the essential designation, is to be able to show that job sites could be safe. And NAHB, along with its construction industry partners, put out a very comprehensive job site safety checklist, as well as posters that we were able to use inside governor's offices and locality and local governments to show that the industry could do the right thing by social distancing and wearing masks and limiting the number of people on a job site, that we were essentially responsible enough to be given the responsibility of staying open. I know I had many conversations with Brian in the early part of the pandemic. You saw the same thing here in Northern Virginia, driving around and rolling my eyes when we saw workers that didn't have a mask on, or they were, there's 6 of them standing around, very close orders. There were a lot of people out there who were trying to play gotcha with the industry. I remember seeing an email from one of our members that someone who could just designated him or herself the whistleblower, was talking about the number of porta potties on a job site, and the 2 that were on the job site didn't seem that was enough for sanitary purposes. So we had to recite OSHA guidelines and be very active in trying to chase down and make sure that the industry was able to stay essential. And we were able to do that as we've seen the restaurant and the retail industry really collapse. Generally, the housing sector and the home construction and residential construction center have remained open. The second piece really was making sure that the government's response to the crisis, whether through its, they've been calling it stimulus, was hardly anything from their stimulus. It really was an economic stabilization effort on Capitol Hill. We haven't even gotten to the recovery and stimulus phase yet. And that included making sure that companies that were affected by the slowdown were able to tap the Paycheck Protection Program. That's a small business program that many of our industries, many of our members across the country were able to tap from the Small Business Association and get a forgivable loan to keep people on the payroll again as they weathered the economic slowdown. A couple of flaws in that bill, though, and not the bill itself, I should say. That the bill is fair. The legislation is fairly clear. Any company with less than 500 employees is eligible. Yet the Department of Treasury, as well as the SBA, decided to tag on some rules on there that aren't too favorable to the industry. One is precluding spec builders, multifamily property owners, and land developers from accessing the PPP program. It goes back to almost a decade-old regulations that govern other SBA lending programs that keep speculative businesses or passive businesses, in the case of multifamily owners, from accessing small business loans. We think they've erroneously added this provision through regulation to the bill. We've got friends on Capitol Hill pushing for a reversal of that. There was even a court case in Michigan that was brought by a gentleman's club who was precluded from using the PPP funds. It has one in court that said that has nothing to do with what your business is, simply whether or not you have less than 500 employees. So there's ongoing, we continue to petition the White House as well as the Treasury and the SBA to reverse that regulation or do away with that regulation so that more members can access the PPP program. One of the other holes in the PPP program that is a result of legislation is that C6 organizations were precluded from accessing, and Brian and I have had many conversations about this. Our local associations and our state associations that have been hurt by the pandemic because of stay-at-home orders really have seen a decline in their revenues. And even though the industry is working, so much of the revenue of not only, NAHB is very much in the same boat, but our state and local associations need access to their home shows and their trade shows for that badly needed revenue to continue servicing the industry. So one of the things we've been working on, and Brian's been very, very helpful in this, is getting Congress, when they do the next piece of legislation, to include C6 nonprofits. Those are lobbying nonprofits, for lack of a better term, not your normal C3s. Trying to expand that program to make sure that they are eligible for that program as well. And of course, we've got tax abatement, tax forgiveness that was part of that larger coronavirus legislation earlier, like a couple of months ago. Mortgage forbearance, as well as eviction moratoriums to make sure that people didn't lose their homes or didn't lose their apartments. Those are things that are working very well. We have, from a multifamily side, if we have many multifamily owners and developers on the line, we have seen rents generally stay stable between April and May. It's kind of been a good story. It depends on whether, if you're a Class A property, maybe a 1 or 2% fall off in rent collections. If you're down at the low end of a subsidized or low-income housing tax credit property or Section 8 home, you've seen those numbers grow larger. But by and large, we're seeing single-digit arrearages, and that is good news for the industry as we move forward, especially when you saw the job numbers come out last week. Obviously, a collective sigh from the president's team and the Congress. And unfortunately, it's going to forestall that next piece of legislation, I believe, where we had hoped we were going to do next round of legislation that could fix that PPP issues for us. We could have seen that in June, but I think we're now looking more at a July timeframe. Again, not ideal for our C6s that are desperately in need of some funds to keep moving along. One of the other things that we've been doing is engaging with the Trump administration for 3.5 years now. We've got a very, very close relationship with the White House and the Trump administration, and that continued to extend into the COVID pandemic, where our CEO and NAHB were named to the president's Economic Revitalization Task Force. Calls with the president and his advisors, as well as the opportunity to submit I think it's a 10-page document. You can find that on NAHB.org. But putting together a long list of not only short-term and medium-term, but then also long-term agenda items for this White House and Congress as well to tackle when it comes to not only stabilizing and recovering the industry, but then moving forward. How can we, so remember, we were in a housing affordability crisis before this crash. We're going to be in another one coming out of it, and it's really important for us to find those tools and mechanisms that the federal government can use to alleviate the pressure on home prices and allow us to build more homes and house more people who want to own a home or want to take advantage of apartments. Look, interest rates are, God, I never thought they could go lower than they have, but yet here they are. Now, we're already starting to see a little bit of an uptick in interest rates because of the good economic news last week. Now is the time to buy a house, but only if there are homes available, and it's important for us to keep doing that. So then I talk about what we're looking for in the next piece of legislation. High on the list, if not top on the list, is fixing those problems with the PPP program, whether it's spec builders or making sure that C6 organizations are available, are eligible for the program. That's one of our fixes. We are talking about rental assistance. As we talk to multifamily members of the association, while they have seen those good numbers for arrearages these first couple of months, there is concern about 4 or 5 or 6 months out when the jobs don't fully come back yet unemployment insurance or government stimulus checks are no longer available. Are they going to be able to pay their rents? And looking for a rental assistance program that help those people stay in their apartments, but yet make sure that owners can continue to pay their own mortgages on the building or do the necessary upgrades to keep those properties safe and sound. They're also talking about an infrastructure package is really one of the big stimulus bills. So we're watching a House infrastructure package that came out last week. While we generally support infrastructure, we like roads and bridges and trains and transit are really important to get people back and forth from their homes to where they work. It also brings supplies to the industry. A transportation system is really important to us. However, what comes with transportation sometimes and infrastructure comes an outsized emphasis on building codes or environmental standards. And while we like to keep those things kind of bottled up in the federal sector, I have no problem if the federal government wants to impose its own level of code or energy efficiency on its own buildings. But when that trickles down into how we develop land in northern Kentucky or California, or the energy codes that are required in order to tap some of those infrastructure funds, that's where I get really nervous. And we're starting to see some of that creep into that House package that we talked about last week. I don't mind making sure that federal infrastructure dollars flow to areas and states and local governments that are doing the right thing by housing. That's where we can have a good nexus between infrastructure and housing, not the type of housing we build, but making sure that local regulations are low. That way we can build a more affordable product. That's something that we're focused on with infrastructure. And then finally on the policy piece, and I'll turn a little bit to politics. That's always a fun part of these conversations. When we talk about, we've been so focused on the COVID pandemic, and like I said, stimulus or recovery or stabilization. There are a host of other issues that we've got to be focused on, because at some point we're going to come out of this recession. At some point, Congress is going to turn its attention back to national policy issues. And one of the things we were working on just before the Congress jumped in to the COVID crisis hit us was the energy bill that the United States Senate was working on. In particular, an amendment that we were working against that was sponsored by Senator Rob Portman from your neighboring Ohio and Senator Jeanne Shaheen from New Hampshire, that would give the the federal government, in particular the Department of Energy, an outsized role in the energy code development process, essentially giving them veto power over a consensus-based code and allowing them to layer on their own proposals to get the code up to what DOE determined to be its own energy efficiency guidelines. We're fighting. We'll continue to fight against it. There's rumors that bill may come back over the summer. So we are slowly starting to talk about that again and build our support to try to make sure that we defeat the Portman-Shaheen amendment that we think is going to be it's one more step, what we believe, to what is eventually going to be a national energy code, and we're trying to stop that to make sure that you all have the ability and the flexibility to create the energy code that's important for Kentucky. And then, looking forward, we've got national flood insurance. We haven't talked about the national flood insurance program for a while because Congress has authorized it through the end of the fiscal year, which ends on September 30th. But that's another program that is constantly under revision, and we need to make sure that we're staying on top of that. That's another long-term item for us through the course of this year. So now I'm going to pause there on the policy side and talk a little bit about politics. Like I said, it's always a fun part. Like I said, who would have seen 3 months ago the COVID crisis shaking up the presidential race? You've got now the nominee for the Democratic Party in Joe Biden, who has been relegated to his basement in Wilmington, Delaware, for the past 3 months. You've got Donald Trump, who's been relegated essentially to the White House. And if anybody's an observer of President Trump, you know that he likes to be out among his supporters holding big rallies, and he's been unable to do that because of the health concerns. You've got the Black Lives Matter movement that has taken over Washington, D.C. and many cities around the country, essentially supplanting the COVID crisis as the top news item in the country for the last 2 weeks. I've had people tell me I can't even find any news on how's the virus doing, or I guess who cares how the virus is doing, but these places that are starting to reopen, what are the impacts? What's science saying? You can't even find that now. So for politics, as much as you like to think of it in long terms, it really is. American voters tend to have a short-term memory, and we kind of lurch from one crisis to another, which all leads me to say we're still hundreds of days from the election, or still outside 100 days from the election. A lot can change between now and then. When I think about the presidency, I still believe that it's President Trump's to lose. Joe Biden, by virtue of his propensity for some gaffes when he gets out on the campaign trail, being stuck in his basement and largely well scripted, has enabled him to kind of build a lead over in some national polls as well in some of those swing states. But President Trump is really going to start getting going here. I've heard, as of yesterday, he's starting to game plan out some of his large rallies. I look for the president to really hit the accelerator pedal now into the reelection. But again, I think it's his to lose. And there are some days where I wake up and I think that that he may just do that. And then there's other days where I think that he's going to coast to reelection. But I would tell you, if you're watching the presidency, whether you're a Biden fan or whether you're a Trump fan, or maybe not a fan of either one of them, but party affiliation is important to you, don't worry about the national polls. Those are going to seesaw back and forth. The president's numbers have stayed remarkably at 45% pretty much from day one of his campaign, of his election, and through these now 3.5 years. Pay attention to those swing states: Michigan, Wisconsin, Ohio, Florida, North Carolina, Georgia. Those are the areas, those are the polls you want to pay attention to. President Trump needs to largely rebuild the coalition of states that got him to the election in the Electoral College all those years ago. Arizona has now become a little swingier for the president than it was in the past. I think he has got to pretty much win all of those states. He can lose Michigan and Wisconsin and still get there, but he's got to win Florida and North Carolina, Pennsylvania, the biggest swing state perhaps of all for him. And if you're a president's fan, if you're a fan of the president, don't despair. If you see some of these polls go back and forth, what I would tell you is the president is sitting on more money than he knows what to do with, and trust me, they know what to do with it. You're going to find the president is working very hard building his grassroots effort in all of those swing states. You don't hear a lot about it because that is the real grunt work of campaigns, but the president has it's not unlimited resources, but it's pretty darn close. And the president's going to have a campaign that will go head-to-head with Joe Biden and the Democratic machine as well. The real battle, I think, is going to be in the United States Senate. Obviously, Senator McConnell at the top of the ticket as far as statewide races in Kentucky. He of course will be just fine. I'm not worried about Senator McConnell in any stretch. But Senator McConnell is worried about his three-seat majority in the United States Senate. They've got to defend 10 seats. They've got to defend actually over 20 seats of the 34 that are up for re-election this year. But 10 of them are really in the swing category. Starting kind of west to east, you've got Montana, you've got Arizona, you've got Iowa, you've got some races down in North Carolina that they need to watch out. 2 races in Georgia, the Maine seat, Colorado. There's a lot of races out there, and again, Mitch McConnell only has a 3-seat majority to play with. Now there is 1 seat that they have a good opportunity to pick up. That's the Alabama Senate seat, currently held by a Democrat. I think the Republicans feel very good that they can pick that seat up. So we'll give Mitch McConnell 54 seats now that he holds. So that means he's got really has 3 seats that he could lose and still hold the majority. And those seats that I mentioned are really they could lose 4 or 5 seats easily in this election cycle. So watch the Senate races. That's really, I think, a bellwether for how the president does. In fact, if the president does well, I think he pulls the Senate across the goal line. If the president gets washed out, I think the Senate flips pretty handily and gives Chuck Schumer the majority leader slot in the United States Senate. And then focusing very quickly on the House, I don't see the House flipping from Democratic hands at all. It's too big of a majority for Nancy Pelosi. I think you'll see some of the seats that they won go back to the Republican side, some of those suburban seats, a handful of them, but certainly not enough the numbers that it would take to make Kevin McCarthy the Speaker of the House. The Republicans may get a little closer to the majority, but not that likely that they would take over the majority. So that's why I see the politics shaping up for the rest of the year. So I'm going to stop there and happy to answer any questions you have. And again, I want to thank you for letting me come visit with you for a few minutes today.
Again, if anybody has questions, if they can please type them into the chat box. And if we are waiting for somebody, we'll see their name pop up here. Question I have for you, Jim. Recently
Sure.
Signed into law was the Payroll Protection Flexibility Act. That has to do with the Payroll Protection Program loan. Maybe a couple of highlight details. It had about 5 things that it really did well for those folks who took advantage of the Small Business Administration loans. I don't mean to put you on the spot, but I know that you all have been working on it. But maybe just a couple of details for those that are on the line with us today.
Yeah, I think that probably the 2 things that it did, it allowed you to essentially, if you're a business, to kind of double dip. You were able to take a Paycheck Protection Program loan, have that loan forgiven, using it for purposes of payroll taxes and paying your employees. Yet you're also able to continue to take advantage of the write-off that you get from paying payroll taxes and paying your employees, right? So Treasury had initially come out with the regulation saying that you couldn't take advantage of the tax deduction that comes with paying your employees if you use the Paycheck Protection Program loan to pay those employees. Huge uproar when they did that. They've reversed that. Congress now allows you to get both the loan. It's essentially a forgivable loan from the government, but also take advantage of the tax treatment that you would normally get. And the second thing it did is allow more flexibility for how you are supposed to use those paycheck protection funds. What people found is that there were other expenses that would have been really helpful to be paid with the original PPP loan. They've now created a much more flexible provisions that allow you to use it for not only paying your employees, but more of the business expenses that you would have as a business to use that loan. And then the third thing that it increased it expanded or extended the deadlines for taking advantage of using those loans. I think giving people more flexibility. A lot of people don't have loans. A lot of people don't have expenses to pay because their businesses aren't open. If they do start beginning to open, as we see, they're going to need those loan funds available for a longer period of time into the summer to get their operations back up to full capacity. So those are three of the things that we think are great, not only for the people who have loans now, but also when we expand the loan program, it's going to allow our state and local associations the ability to have that flexibility as well.
Jim, you got not so much of a question, but it's a statement from Ross Khrushchans with Khrushchans Construction, a member of our executive committee. He states, I think it's very important for the National Association of Home Builders to get the 501c6 and the PPP. Our association, along with many others, have not held events. This is crucial for us to continue to operate efficiently. Jim, you probably have seen the poll that went out amongst executive officers some weeks ago asking about the effects about COVID-19 and what it's had on our associations, and it looks like the vast majority of us are having major impacts, some of which of us still consider ourselves to even have more major impacts in the coming months. And that seems to be the theme of this pandemic, is that the future always seems to be worse than what the present is, but the present's not been very good either, Jim. So I know I bet you and I were almost talking daily on this subject a few weeks ago. But now we have understood that the votes have been extended through last half of June, and now they're talking about July. And now that we're seeing employment pick up, there's been a little more hesitancy to pass some additional recovery money. So maybe you could expand a little bit and kind of tell us what the talk is behind the scenes, why this is getting pushed out to July, where the Republicans are with this, the issues that the Democrats keep bringing up in these proposed bills. They kind of tend to seem to Christmas tree this stuff up and put a bunch of other ancillary stuff in there that the Republicans are not interested in discussing at all.
That's right, and Ross, you're absolutely right. It's critical that we get C6 eligibility into the next package. And to Brian, to your point about the kind of politics, I think the Democrats overshot their coverage, so to speak, with a $3 trillion bill. It was completely Christmas treed, as you said, and what you have is it was almost uniformly rejected by the Senate Republicans. And so automatically that gave Mitch McConnell and the Republicans, hey, look, the Democrats have gone plumb crazy over here. There's things that are completely unrelated to COVID in here. We're not going to touch it. It's too big of a package, and we're not going to do it. And so that they pumped the brakes a little bit. Then you have the job numbers that came out last week, and it bought into and it actually helped bolster the Republicans' argument that, wait, let's not rush to spend even more trillions of dollars. Let's see if what we've already spent is working and the economy is starting to turn around. Now, one month of numbers does not a recovery make. Who knows? I think there's fear that we could watch the numbers go back down a little bit, and that if you put too much emphasis on 1 month, you're bound to be disappointed. That said, even our economists believe that we have hit the bottom of the housing market and the bottom of the economic trough, and we are on our way back up. Now, whether it's a U-shaped curve or it's a V-shaped curve, and how steep is the V, who knows? That stuff always seems to get everybody's right in hindsight when we look at it. But that has essentially pushed back the timeline of moving the next coronavirus package and essentially stalling our efforts on C6. Now, that said, our allies in this is ASAE, which is essentially the association for the association. They are working very hard, hand in hand with us. They're doing a big push. We, of course, have our legislative conference in 2 weeks following our spring board meeting. June 22nd, 23rd, and 24th is our virtual legislative conference. This is one of the items that we will be pushing. There is bipartisan support for the C6 issue on both sides of the Capitol. I personally think it's just a matter of time. Unfortunately, time is not on our association side, and so we need to get this done as quickly as possible. I think the numbers are 60,000 C6s across the country that desperately need this money, a drop in the bucket compared to the millions of associations. I'm sorry, the millions of businesses that are already eligible. So we're pushing very hard for it.
And we would need to also remind those in Congress why we do represent the housing industry. We don't create the same products that the housing industry does. So
Right.
our product model is based upon the same product model as chambers of commerce, who are also
Right.
C6s. And I would assume that the U.S. Chamber, along with the state and local chambers, are actively engaged in this as well. I know that ours locally is, as I serve on their Business Advocacy Council, and they've been advocating for this the entire time. The other unique thing is that this is going to be a self-help for NAHB. For those on the call, they probably do not realize that I believe that the Southern California Association has left the Federation due to financial problems. So these are very large associations, and we all need to be rowing the oars together. And we can't do it if we're struggling that hard back home at the local level. So I saw that Ross was typing some additional comments, but he may have let up. Are there any other questions for those on the call today? Well, Ross is still typing. I think you're about ready to get it, Jim. Okay, Ross mentions, you also mentioned about evictions. There's something the states need to allow again. I understand people have been affected by COVID-19, but there are many people taking advantage of the situation currently. Our governor in Kentucky will not allow evictions to be heard until at least August, which will be 5 months of free rent.
Yeah, Ross, you're absolutely right. That is one of the look, first and foremost, I'm sure you agree. We don't want to put people out on the street at this time. We get that, but there needs to be a reasonable balance between evictions and keeping people in their apartments. I mean, you're absolutely right. I think there are people taking advantage of this. I will say I think that's a very small percentage of people out there. And if you're going to mandate an eviction moratorium, there needs to be some way to make these landlords whole. I find that when we talk on Capitol Hill on this, you have lawmakers who are pushing for eviction moratoriums have a deep distrust of landlords and apartment owners who think that they're just looking for any excuse to put anybody out on the street. And yet on the other side, you have people who have a deep distrust of tenants that they're going to do the right thing. And there's plenty of people out there who probably have the means to pay their rent, but they're just choosing not to. We've heard rent holidays and all kinds of things like that. But we are pushing very hard to find that balance to not extend the federal eviction moratoriums, or at least provide a way that if you're going to mandate people are allowed to stay in their apartments, then we've got to help the landlords out as well. So we're working on that.
Jim, as we surveyed our members back home, I agree with you that it's a small number of residential renters that are skipping rent, but what we're rented to is a massive amount of retail and commercial renters, given the fact that they've had disruptions with their ability to sell their goods and services. That's a much larger concern than what we see with residential renting.
Right. Yeah, talking to our my friends in the commercial side of it at NAHB and the building owners and managers, as well as our friends at the International Council of Shopping Centers, as kind of part of the bigger real estate cabal here in Washington, D.C. They are very concerned. They are looking at programs that would create it's almost like a 9/11 victims compensation fund after 9/11, trying to build a program where you could have retail establishments, but also the large retail operators who own those the malls, the buildings, and the retail spaces, that they could tap this money to make sure that they can stay vibrant and viable at this time too. So there's a lot of programs out there.
Yeah, we had Rob Deets on last week on a webinar with us, and he had mentioned that even some malls were transitioning over to residential developments because they understand that their retail model is not going to continue to operate the way that it once has. Ross had a couple more comments. He says he agreed.
Yep.
He's not trying to kick people out, that he's just trying to be fair with everyone, and he also wanted to thank you for your help and understanding on the issue.
Great. You got it, Ross. Thank you.
I'll just, for full disclosure, Ross is our president this year, and was
Excellent.
one of the very first. I think the first German family that came to Greater Cincinnati and set up shop here as builders. So multi-generation builder. Jim,
Excellent.
I don't see any other questions coming in, but I wanted to thank you today. We really appreciate all your efforts. Just so those on the webinar here know, Jim and I work very closely together, and we'll be working even closer together in the coming years. If we ever get to be in the same room together again, that's yet to be seen. Jim, thank you today. I will wrap this up by mentioning our upcoming webinar. This will be the last in our series, and we will create more if, in fact, the members feel that they need more. I'm assuming that the information will continue to change as we move forward. But on June 23rd at 2 p.m., which is just a couple of weeks away, our next webinar will be COVID-19 Federal Tax Changes, What to Know. You'll have an opportunity to learn about the recent tax changes that Congress has enacted to help businesses and individuals get through these difficult times. This includes the Employee Retention Tax Credit, delayed payment of employer-paid payroll tax payments, penalty-free retirement account withdrawals, sick and medical leave tax credits, and net operating losses. We will discuss both the provisions that Congress has enacted as well as look at the changes that might be in the pipeline for future relief bills. Our presenter will be J.P. Delmore. J.P. is the Assistant Vice President of Governmental Affairs of NAHB and our nationwide tax specialist, and he'll be there to join us for that webinar. Again, thanks to Duke Energy, a sponsor for our webinar series. We hope everybody has gleaned a little bit of information today, and we'll continue to work to keep you all informed. Thank you, and have a wonderful day.